back. What's going on? Here to learn and share. What's going on? Spam Likely. Shout out Spam Likely in the chat. What's going on, Marco? What's going on, Kashaya? What's going on, Kim? Everybody say what's up to Spam Likely. Everybody say what's up in the chat. Say, hey, what's up, Spam Likely? Spam Likely, you know who you are. Spam Likely, you know who you are. Put this over here. I had to, I'm sorry I'm late, y'all. I had to, it made me, when I opened my Streamlabs OBS, it made me like, reinstall, Spam Likely know who they are. It didn't, they named me Spam Likely. That's what I called. I got a message from somebody, and they, I said, wait a minute, you ain't Spam Likely, are you? Somebody sent me a message. Somebody sent me a message talking about, hey, if you know somebody that should be voting for Kamala Harris and want to make some money, share this with them. I'm like, so you one of the people that be spamming my phone? Oh my God, this gonna drive me crazy. This gonna drive me crazy. What did this thing do with my? It's gonna drive me crazy because I can see that shadow over there. Okay. Alright, that's better right now. Alright. Took care of that. Took care of that. Okie dokie. Nah. I was serious yesterday at senior night. I said, wait a minute. I said, I actually know somebody. You want a thing from Popeyes? Yes. Yes. Y'all hold on while I put in my Popeyes order. Give people a chance to come in if anybody. Everybody put something in the chat. Let me see who in here. Ain't many people in here. This man making oxtail pizza and oxtail pies. Hey, when I said ain't many people in here, some people dropped off. Some people dropped off. Who all in here? Is it straight? Is it only gang? If it's only gang in here, we can go private. We ain't got to make this a public thing. If it ain't nobody but gang in here, who all in here? Everybody put a one in the chat. So if it's just gang, we gonna go private. If it's somebody here that's not in the gang, then we'll stay public. Okay, I see one that's not gang. Somebody popped up that's not gang, so we gonna stay public. All right. Yeah, we gonna stay public. I see somebody that popped up that's not gang, so let's get to it, man. Hey, wait a minute. Rewind. Good evening. If this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, please allow me to still say welcome. but give you a nice heart. Well, thank you for always tuning in to Tim's Tidbits. If by some slither of my huge imagination you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spider if you don't hablo español, right? And if my picture was on the right screen, I could say that you are now in tune to another episode of Intra-Day Price Action Recap. But what we're going to do today is, since it's Friday and we had football last night, we going to do a recap of the entire week. We're going to recap the entire week's price action. We're going to recap the entire week's price action. And for anybody that's a member of the gang, I am in the come here. I am in the voice channel. If you have any questions, pull up in the voice, unmute, and say, "Hey Tim, I got a question. I cannot see the chat for the Discord. It's over here on the screen behind everything else. So if you got a question and you want to ask me a question in the Discord, just unmute and say, 'Hey Tim, I got a question,' because I can't see you typing anything in the chat. All right? I probably will break into class participation mode. I don't know. I'm not saying 100% for sure that I will, but knowing me, I like to get into class participation mode and get to running my mouth. Let me take this stuff off my chart. Y'all can see I was actively trading today, so I have things on my chart that I was watching in price action. I was watching the morning session. You see I had a breaker, I had a bearish breaker marked out up there, right? During the morning session, you can see that I had this SIBI marked out here for the afternoon session. Can anyone tell me why did I pick that? What about that SIBI made me pick it? It's two things about that SIBI that made me pick it. So can somebody, you can either unmute if you're in the Discord, or you can type it in the chat. Can somebody tell me what two things about that SIBI made me pick that out? Make me want to watch that.
It was made during the macro time?
Yes, it was. That is one thing. It is a macro SIBI. What's the second thing? I give you a clue. I just helped you out by putting the times on the lines. Could y'all hear what Kashaya said? Did y'all hear what Kashaya answer was? Put a 1 in the chat if y'all heard Kashaya. I'll take that yes as a yes. I see a 1 in the chat. And put my headphones on in case. Did it echo? I'm putting my headphones on just in case it echoed. I don't want it to be echoing when you talk that talk. Nothing? Ain't nobody got nothing? Ain't nobody got nothing? What you got? Hold up now. Are y'all delayed? How much of a delay is it? Let me see how much. It shouldn't be nothing but like 3 seconds of a delay. Y'all just ain't answering. Y'all just ain't gonna participate.
Is it because it's the first fair value gap?
I'm trying to see how much of a delay. I'm trying to see how much of a 1, 2, 3, 4. 4-second delay. It ain't no long delay. It's a 3 to 4 second delay. Right? What's up, E-Rock? Come on. I right here. What's this? You see this line? Can you see what that line say right there? What I put on that line? Right there, you see what that say right there? Can y'all see that? Nope,
Yeah,
not.
130.
And can you see what that say right there?
2.
2. So what is that? What is 1:30 to 2? 1:30 p.m. to 2 p.m. Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. What is 1:30 to 2 p.m.? Opening range. There you go, Kim. Look how Kim pulling up with a hard-hitting answer. So, it was created during the opening range, right? Not only was it created during the opening range, it was created during a macro time. So that right there is very important to me, right? It's very important to me. We have in the morning, right? We went up without stopping. And then in the afternoon, we came down, right? Starting around here at lunchtime. We came down without stopping. Melted up, melted down, right? And then we created a SIBI right here. When we melted down, what did we not do right here? What did price not do right here? Question. Hey, Kashaya, you in the Discord. It's all on you. Somebody pull up in the Discord with Kashaya so she ain't got to be the only one talking. Correct. Did not take out the low. Right? Did not take out the low. Okay? So, and not only did it not take out the low, it came into a 4-hour BSI, and it came into the new week opening gap, right? If we do not take out the liquidity, what do we not want to do? What shouldn't you do if you haven't taken liquidity? You shouldn't try to predict what? Somebody come in the Discord so Kashaya won't be the only one talking. I want the talk interaction because it goes a lot faster than trying to wait on chats. Right? Where it's going, no, not where it's going. You shouldn't try to. It didn't take out liquidity. So you shouldn't try to predict a what?
Reversal?
Reversal. You shouldn't try to predict a reversal. So what I want to see is, right? I want to see this hold up as a SIBI. Right? I want to see it hold up as a SIBI. If price gets above it, right? I'm not looking for it to just, it needs to show me that it wants to go back up, right? It needs to get up here, use this as support and displace away, giving me an imbalance, right? Respect a breaker. It needs to show me that it wants to go up because we didn't take this liquidity. So I'm not going to try to predict a reversal, right? Even though we came to this anticipatory reactionary point, we left this low, right? We left that low. And looking at where we came from, right? This low here was the start of this move. Okay? If you want this low to be the start of that move, now you got to prove it to me right here. Right? Why? Because this is the parent of the entire move, right? This and this is the it's minor sell side, right? So since we came that close to that sell side there, right, left a portion of that fair value gap open, okay, failed to make imbalances going up, right? Now, I want to see this act as resistance, right? I want to see it act as resistance, okay? Now, what kind of signatures do you look for when you're looking at something like this, right? I already said some of them, okay? Notice in there, can somebody tell me, let me go to a lower time frame. I'm sorry, because you can't see it, right? Can somebody tell me what those two, this blue line and this blue line, what do they represent? Irma, welcome to the Discord. This blue line and this blue line right here, what does that represent? We sprinting, y'all. We sprinting.
An oppositional, like, fair value gap, or BPR, I guess.
BPR, very good. The oppositional fair value gap. I don't know what you just made up right there. You talk about the opposing fair value gaps.
Yeah, because they both.
That's what you. So we got a balanced price range there, right? So we got a balanced price range, right? We got on the 1 minute, right? We got I think it was a 5-minute SIBI right there. Yes, a 5-minute SIBI made during the macro time, right? But you notice all of this, right? All of this is inside the opening range. So I'm paying particular attention to the PD arrays that's created inside the opening range, right? I'm paying particular attention to those right there, okay? So what we talked about, we're looking for signatures to help you to help you be able to get in and out if you need be, if price ain't just running, it, help you be able to get in and out or get you to trust which direction you want price to go, okay? Looking for signs that this right here should keep price down, right? As we're going up, right? We see on the 5-minute time frame, right? As we see on the 5-minute time frame going up, right? We did not create any imbalances going up, right? So price is just kind of doing, right? It's doing. We got a long wick here, right? Coming down, right? And then we overlapping evenly, right? We overlapping evenly on the way up, right? We're doing. Traded up to the high of the just above the high of the BISI, poked above it. I mean the SIBI, and then came down and closed below consequent encroachment, right? Still respecting consequent encroachment. The next candle here, we come up here and we close near the upper quadrant, but then the next candle we come back down and close near the lower quadrant, right? Then here, right, this candle here, it goes up and closes outside of this right here. But if we pay particular attention to what's going on here, right? Somebody tell me 2 things that this candle did, right? Give you a hint because I don't want to bust your brain. It got to do with here and it got to do with here, right? What did this candle right here do? I'm listening. I'm listening and looking. This candle right here, right? Got to do it here. Got to do it here.
It went to 50% of the wick.
50% of the wick. I wouldn't think about that, but I'll take it. But what is going on in this area? 50% of the wick, it did come to that right there, right? But what do we have right here? What are these right here? What are those right there? This, and this. What are those? Fail to take out the high. Nope, that's not it. Right, 50% of the wick. I'll take that. That's very good. I wasn't even thinking about that, but that's a good one. But what's right there? What is that right there? What are these candles right here? Right, when you look at that right there, what are these candles right here? Not the order block. Yeah, equal. Yep, relative equal bodies. Very good. Then when you got relative equal bodies with a long wick up there, what do we have right there? Right, relative equal bodies with a long wick up there. Right, we came up. Right, and then we displaced down. Right, yes. So we traded above the buy side that had been accumulated, then we traded into the rejection block. And like Kashaya said, we went into consequent encroachment of that wick. That was the wick that created the most damage on this move up here before displacing down, right? Expanding down, however you want to look at it. Displacing, expanding, you got a fair value gap, displacing, taking out the sell side, right? So we took out the buy side that we had been engineering here inside this balanced price range, inside this bearish fair value gap, went above the buy side, went into the rejection block, went into the consequent encroachment, and then we dumped off. Right? We dumped off. Now that we've dumped off here, now this move down right here, that's the move that's giving me the confidence that this should hold to push me down, right? It's kind of late in the session, so I'm not anticipating it to just die off forever, because it's late in the session and it could just die off forever. But we got this weekly new week opening gap. We got this 4-hour PD array, and then we've already had a trending afternoon, and then price is going to come down and, you know, close somewhere up off of the low, right? Some people ain't going to want to be, you know, the algorithm going to start like cashing out a little bit. It's going to start cashing out a little bit. So, and then as we go into the 4 o'clock hour, right there, we closed right there at the high of the new week opening gap. All right, so just want to take a deep dive into, you know, some of my thought process behind when I was looking at this area and trying to trade this area, because it was a little more tricky than this area up here. I think this area up here is pretty clear cut. Oh, and then also, let me go back there. Right, also, one other thing that I was watching on this move up right here, right? What I was watching on this move up right here, and then as I saw this move coming down right there, right? This move down here gave me confidence, right? Y'all see what I got marked out right there, right? Can y'all read that? If you can't read it, that's the 3 o'clock open, right? If smart money is going to sell, right? They're going to sell for one in the premium, and they want to sell above highs and above the opening price, right? They want to sell above highs and they want to sell above the opening price, right? So when we get this move and drop down going into the 3 o'clock hour, right? I don't want to see price trying to get back above that. You see what I'm saying? Because on the 3 o'clock hour there, we come and we go down, 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 down. I don't want to see price showing a willingness to get back to that, right? So when we come back up here, we wick off, right? We wick off, right? Don't make it. And now we just staying below consequent encroachment. So it's getting weaker and weaker and weaker and weaker, right? First time it came up, tapped into this balanced price range. Second time it came up, right? And it tapped to the balanced price range and got an institutional order flow entry drill, right? Next time it came to the low of the SIBI, right? And then after that, it couldn't get above consequent encroachment of the wicks, right? So it's showing an unwillingness to get back above there. So that let me know that smart money has got short up here and forced when you go above the high, what do? You force traders long, right? So now they're not trying to give them an opportunity to mitigate in. They want them deep underwater, right? They want them deep underwater. So those are different little signatures you could be looking for in price as price is ticking and as price is going. And then when you're looking at it, those 5-minute candles, but when you're looking at everything on a 1-minute candle right there, now you can see right on the 1 minute, because I'm looking for entries on the 1 minute, and then on the 1 minute you see, you know what I'm saying, other opportunities to, you know what I'm saying, like you can see like other opportunities where you got a possibility of taking trades. Because when we come here, right, we poke above there, right, and then we drop down, then we shoot up here, right, coming up into that order block. That's the rejection block on the 5-minute time frame, right? We trading above here, right, because that one put people in long, drop down. That one there, you know, for anybody who think they missed it there, now they done got long for real, because we didn't keep dropping down, right? And then once they trick people in, right, then what does the market do? Immediately comes back and punishes, right? Immediately comes back and punishes right there. So when you see that punishment there, now you got opportunity to go in there, right, and come down. But now you can see it's playing around with it, because it went back again above that hot air. You see what I'm saying? It went back above that hot air. This is like that little, they starting to manipulate, because it should just, once we came back there, right, algorithmically, there was no reason to go back there, right? It should have just dropped off, come below the low, right? But then you come down and it come back, poke above it again, dilly-dally, come down, and then drop down again toward like the end of the day, going into like the settlement macro, right? Going to the set, this that little messing around with you, manipulating people, you know what I'm saying, trying to catch people that's trying to get short at the end of the day to catch the rest of that dump. Up, come here, I got you, boy. Right? But on the lower time frame, on the intra time frame, you can see how, you know what I'm saying, price, once it went up there, it was given opportunities to come back, get short. This was a nice opportunity up here to come back and get short if you know what I'm saying, wholeheartedly believed in the move, because we're here to, matter of fact, let me turn this on, right? This is your 250 to 310 macro, right? This is our 150 to 210 macro right there. This right here is the 315 to 345, right? And then this is the 345 to 4 o'clock time frame in there. And as you can see, during those macro times, right, the 250 to 310, right, we dumped down, right, attacking the sell side after we forced traders in. Price came down, taking them right back out to punish them. During this macro window, right, we just pretty much engineered a little liquidity there. We engineered some liquidity, right? And as we got halfway through the 3 o'clock hour, right, we poked above this short-term high right there, forcing traders in long again. And then during the 345, the end of day macro, 345 to 4 o'clock, right, and also the settlement macro, both of them overlap. Price, you know, attack the sell side right there after forcing traders in long during that macro, forced them in long, then turned around, punishing them for trying to pick the bottom. Right. On the lower time frame, you can see a little bit more detail, but it's the same thing we talked about on the 5-minute time frame up here. Up here. Right there on the 5-minute time frame. Same thing we talked about there on the 5-minute. Just make it a little bit more visual when you can see the macro windows, right? You'd be like, okay, I'm looking at it, I kind of understand it. Oh, it makes sense. I can see the macro windows, right? On the 1 minute, looking at the 1-minute time frame, right? You'd be like, oh yeah, I kind of see what Tim talking about. Yeah, I see it. Oh, I see about this in the macro windows. Oh yeah, that is a macro PD array. Oh yeah, look at there. It did consolidate there, just stayed inside that balance price range. Oh, that. Then during the macro, ooh, look what it did. See, There you go. When you got the understanding of when price should do, what price should do during what times, then you can engage with the market in an educated manner. Now, anybody got any questions before we move to the 15-minute chart and then go look at the entire week? All right, we're going to just look at the 15-minute chart and we're going to walk through the whole week on the 15-minute chart. Oakley dokley. All right, so I think I got a what's the name that'll put the days on there for me. Is it ICT everything? Is it ICT everything? Okay. Yeah. ICT everything. All right. Okie dokie. Okie dokie. So this is all right. Okay, that's the start of the week. That's Sunday evening. Oh no, I went too far. I'm tripping. Why y'all ain't telling me I went too far? Y'all supposed to be like, Tim, you way on another week, man. What you doing? Okay. All right. So now, looking at, let's just hide all this stuff that we already got on there. We're gonna hide everything that we already got on there. Now, looking from Sunday evening over until today, right? This was, all right, what do we open up at? We open up at 20,496.25, right? So 20,496.25, and that right there is our, we're gonna make it orange, and we were gonna make it 2 because that's our open. Orange is for open, right? Orange is for open. That's what we're using it for. Okay, so as we see, we did a whole lot of dilly-dallying in the beginning of the week, right? Did a lot of dilly-dallying in the beginning of the week, okay? So there was opportunity, right? There was opportunity to get paid long and short, right? There was opportunity to get paid long and short. And if we squanch up, right? If we squanch this up right here, right? And look back, right? Do y'all remember this little area right here, right? Do y'all remember that little area right there? Right? Who remember us talking about that little area right over there? What were we saying about that area right over there? Right. If you look there, let's come back. Uh-oh. Nobody? Nobody? Nobody remember what we said about that area right there? Nobody? Swing highs, not sure. Nobody? Okay. If y'all remember last week when we talked about the three sisters, right? Remember last week when we talked about the three sisters, and we said that, right? We said that the ES and the Dow had made all-time new highs, but the NQ still had not taken out these relative equal highs right here, and we were anticipating that to be the draw on liquidity, but we never made it there last week, and we was like, okay, we didn't make it here last week, but we still have them relative equal highs up there. What's going on, Jose? Right now, if we go back to our 15-minute chart and squanch it up like that right there, right, and we put us a line on those relative equal highs up there. All right, and if we can get it on the tippity top, no diddy. If we can get it on the tip, no diddy. Right there. And we hit that with a little BSL, not to be confused with the BBL. Right, hit that with a little BSL. And sticking it up a little bit in case y'all can't see it on Al Gore's internet. Right. All right, then we squanch this back up. All right. What did we hit today? What did we hit today? That buy side liquidity.
You hit that buy side?
We hit that buy side. Right? We hit that buy side. Right? Like to hit that buy side. Okay. Now, looking at what price did throughout the week. This line right here, I just put that line there because that was the beginning of last week. Right? And these relative equal highs was what we were looking for to get involved with, because we said when we were here, right, price was giving us signs that we were on the right side of a market maker sell model, right? We was on, a market maker buy model, right? And then we also said that we could possibly be in the midst of a market maker sell model also, right? But we was like, we're looking at this as a balanced price range, and we want price to stay supported on this until we take out those relative equal highs. And once we take out those relative equal highs, then, our target, our sights will be set on the all-time new highs that was higher up that we can't get in the screen right now. Okay? Now, looking at what price did throughout the week, right? Look at what price did throughout the week. Right, just to show that prices, I'm just doing this to show that price is fractal. Okay, that was our initial, that was where Picasso lived, right? We bring our buddy out in a long time. Let's go get him, right? We ain't talked to our buddy in a long time, right? This right here, Picasso house. This where Picasso lived. Picasso, right? We ain't bring Picasso out in a long time, okay? So, I don't need this line right here anymore. That was just showing you from last week. That's what we was expecting, right? So now, who can tell me what my favorite signature is when it comes to price? What do I like to see? Right? What do I like to see the algorithm do when I'm getting ready to engage? What's my favorite? We done talked about it 19 gazillion times this week. What's my favorite signature? Hmm?
I don't know.
So you don't know? How about you, Irma? You remember what my favorite signature is? Where Tish at when I need her? Getting people in the right way.
I was hoping you didn't see me because I don't remember. I know you said it, and I was like, yeah. And then
Okay.
it skipped my
Here to
mind
learn and
again.
share. Here to learn and share gave it a nice fancy name that I love. What does Here to learn and share call it? The wig snatcher. It's called the wig snatcher. Right? So, Here to learn and share.
A Judas swing or something?
She got it on the screen. It says,
I can't see. I'm in the Discord. I ain't on
it says, get people in the right way, snatch their edges, go back in the original direction. That's the wig snatcher. It was coined by Here to Learn and Share, the wig snatcher. So, here we are here starting the week, right? We're anticipating price to come above these highs, right? We said a long time ago that price overall was bullish, right? In the short term, we had just been consolidating, so we're not trying to trade with the bias, but if the market presents an opportunity, we're looking to buy because the overall time frame is bullish. Do everybody remember me saying that? If you remember that, either say yes or put a 1 in the chat. Do y'all remember us saying that? Remember us talking about that? Yes, 1 in the chat?
Yes.
Okay, all right. So remember that. Now, if we're looking for a reason, if we neutral, but if the market give us an opportunity to buy, right? If we're looking to see some wigs get snatched, looking at what do we got going on here? I know you're saying, Tim, it's all squanched up. I can't see that. You can see the wig snatcher, right? You can see it. We're looking for price to come here, right? Where can you see the market? Between what days do the wigs get snatched? Right? Between what days does the wigs? Can y'all see the days at the bottom down there? Can y'all see these days down here?
Yeah.
Between what days do the wigs get snatched? Look at the buy side. Look at the buy side. No, look at the buy side and see where I go. Look at the buy side and then look at when price force people in the right way and then quickly reverse and snatch their wigs.
Tuesday and Wednesday?
Tuesday and Wednesday. Very good. Right? Because price, right? This is when we started the week. Price is just consolidating. Over here on Tuesday, it poked above that high right there. Right? Breakout traders got long there. And then the price came back down. And over here on Wednesday, came down and snatched a whole bunch of people wigs. Right? Came down, snatched the wigs. Right? Wig snatcher. There you go right there. And then price came back over here, started to come back up, started making its way back up here. Right? And then we came over here coming into Thursday. Right? What did price do again right there coming into Thursday? What is this little area right here looking like it's doing? We're consolidating. What do? We go up there. Give it here. Right? And then price. And then on Friday, we go to Picasso's house. Get to Picasso's house. And what happens when you get above those highs? Right? What happened when we got above them highs? What do we do up there? Right? What do we do up there above those highs? Right there. Speak to me. Not sweet. Speak to me. Distributed. Right? Right? Distributed. And what is this right here? That's the weekly open, right? Right? That's the weekly open, right? So if that's the weekly open, what is this right here in the verbiage. You remember we got a noun and we got a verb, right? This is our noun, right? This is our noun. Y'all remember that's our noun, right? We're not trying to look for everything. Like looking at this week right here, right? Looking at this week right here, we can see this is not the noun, right? This ain't the noun. Why you say that, Tim? Right? I say this ain't the noun because we came here, we went there, we came there, we went up there, we came back down. Right? If it was the noun, we would have came here, came there, went there, and then closed there. If it was the noun. Okay? But what is this in the aspect of we about to get into that right there here to understand. Can you define distribute as it relates to what I called a sweep? We about to. What is this right here in the aspect of the verb? Very good. Accumulation. Right? That's your accumulation. Remember, this is our weekly open. Right? This is our weekly open. Right? When we come up here and we snatch this wig, right? What is this right here in the sense of the verb? Right? Speak to me.
Manipulate. Manipulation.
Right? Manipulation. If Picasso stay up here, remember we said this was our attention was focused up there since last week, right? We're trading neutral because we're doing a bunch of consolidating, but when the market gives us a signature, the wig snatcher, right? Now we're saying, hey, let's see if we can get on board with that. Here's our weekly open, right? We snatch some wigs. This right, we're in the manipulation phase, right? When do you want to participate in the move? What phase what's the higher probable of the, remember we got the curd and the curd, right? What and the curd is involved with the verb, right? Right? The cur word is in there with the verb. Okay? So where do you want to be trying to participate during the cur word? You want to be participating where? Right? Where do you want to be?
I think the retrace.
You want to be participating in the manipulation phase of the move. Now that don't mean you want to participate when it's dropping. You want to participate in the manipulation area. This is the manipulation, right? So that means you want to be participating. In this case, since the draw is bullish, we want to be participating below, at or below the open, right? Where we trying to buy in a discount, but where? At or below the open of a week, of a day, of an hour, of a minute, of anything, of a session. At or below the open. So when we realize, oh, we're in the manipulation because we accumulated, right? And now we're manipulating. How do you know we're manipulating? Because we're moving in the opposite way of where Picasso lived. And it showed us the wig snatcher because it went in that direction, got people happy, and then it turned around and bust their head. Now we're not trying to go short here because Picasso is up there, right? The overall time frame is bullish, so we're looking up there. Why? Because we got relative equal highs, and we're failing to take out those highs. So what are we accumulating right here? What do we call this, right? What is this right here? What is that right there? What is that right there? What is that right there? Trend line liquidity. Very good. Trend line liquidity. Trend line traders are looking at this as some support. So there's another opportunity to snatch some wigs. Right? Why? Because what happens if we break out of this right here and come back and test it and don't break down through it? Who's going to be buying right there? Trend line traders, right? Why? Because we broke out of the trend, came back to it, and didn't break down through it. So they're buying right there. And guess what? Bust them in the head. Right? So now we see the manipulation happen. Now you're on high alert, looking for your opportunity to participate. Right? So if you're looking for your opportunity to participate long, right, all you got to do is look for your setup anywhere over here. Anywhere over here. Now, be it was a very difficult week. This week was very difficult, right? Look at the beginning of the week, right? We got a nice move here, and then like late Wednesday, Thursday, up into early Friday, right? It was very difficult again. And then we got what? The expansion on Friday, right? We got the expansion on Friday. Well, Tim, what are some, oh yeah, and then up here, right? So if this is that, we got the A, we got the M, and then what do we say happened up here? What do we say happened up there? No did. Yes. So we got accumulation, manipulation, and then we went up here and we distributed above those highs. How can you tell that we distributed? Because when we got above those highs, price back it on up, right? And non-algorithmic trading people, non-ICT people, they call this profit taking. This is profit taking Friday, right? We're profit taking on Friday. Right? Don't nobody want to go into the weekend holding positions, right? So they're profit taking right there, right? So when you see this right here, let's go over here for a second, right? Remember I told you I was looking for trades up here? I had a breaker marked out over here somewhere when we first came in. Remember I said we had a breaker over there marked out, and I was like, up here is very clear cut. Over here, I went to detail here because it wasn't really clear cut, but up here it was very clear cut. Right? Why was it clear cut? Because guess what? What did I just say? Right? We had our accumulation, we had our manipulation, and now we're distributing. If price is distributing above highs, what direction does the market go when we start distributing above highs? Right? When we start distributing above highs, the market goes down. Right? So if I know all of the non-algorithmic thinking people are looking for profit taking on Friday, right? What can I be looking for once we go above those highs? A signature to that wants to go down and then participate in the profit taking or participate in the distribution, because now the algorithm is looking for willing sellers. Right? They're looking for willing people who want to sell. Why? Because they want to offset their long positions. Right? So they start offsetting their long positions in it, and we just have us a nice little meltdown back to the weekly open. And we just kind of hang out around there, right around there where we had all that funny price action right there, and we still didn't melt down below that. Because why? We're just hanging out right around this very crucial spot, right? So, throughout the whole week, right, just showing that price is fractal, even during a difficult week, it happens on all time frames. This is 1, 2, 3, 4, 5 days worth of trading, but as you can see, we have our accumulation, our manipulation, and then our distribution above that high right there. And price sells off, and we close look like we closed slightly below where we opened at on the week. Okay, everybody got that? Got it good? Everybody clear on that? Looking at the fractal nature of price, right? And looking at when do you want to participate? You want to participate during the manipulation phase down here if you're trading with the bias, right? Looking for the curd, right? If you're trading with the bias, you want to get involved during the manipulation phase. When price gets down there and then it shows you that it's ready to go back up, right? You can pick any time in here to participate, to the long side. If you're a swing trader, right, you would be looking for an opportunity anytime over here, right, to come back to your target, right? If you're a day trader, you would just be looking for opportunities during your kill zones to, let's see if we got kill zones on here. Yes, we do. New York, London, New York, and Asian. Oh, and then New York afternoon, right? London, New York, and New York afternoon. All right, let's put this to 12. No, yeah, let's just put this to 12 instead of changing the other one. Okay, let's turn this on. Oh, did I turn it off? Wait a minute. Do it not have colors? Like what? Wait a minute. Show. Okay. Let's see what happened. And then do I gotta do this one? Okay. All right. So let's change some colors. London. No, let's go with Asian first. Okay, so we'll make London blue. New York gonna be green. Afternoon, orange. Asian, red. Okay. Well, I don't see no red on there. Oh, there it is. Okay. Okay. All right. So now, see the different kill zones. So London, right? London on Monday looked like it was trash, right? New York on Monday, right? Gave you some opportunities for long or short. I'm not trying to guess whatever you was doing, right? Afternoon on Monday, right? Didn't do too much, right? Then we went to Asian, right? Didn't do too. Asian was kind of down. Yeah, that day. Then London, you looking for your opportunity. London, right? New York, New York afternoon, New York morning, New York afternoon, right? It looked like it did the Lord's work during lunchtime this day, right? This day right here don't look like it was much, right? Then New York morning did the Lord's work through lunch. Then the New York afternoon, this was the day, this was the wig snatcher between between Tuesday, New York afternoon, right, through Wednesday, New York morning was the wig snatcher, right? And then we started the reversal on Wednesday afternoon, right? Then we moved through London on Thursday. New York was the second wig snatcher that set up the New York morning was the second wig snatcher that set up the getting ready to go into the what's the name? And then you see this is like the fractal nature of price right here. Let's talk about this for a minute, because whenever we get into our like just say market maker models, when we get on the side of the curve and we're looking for buys, right? When we're looking for buys, once price starts to set up, right? Once price starts to set, okay, price has given us the manipulation, right? And then we're coming back up, right? And it's giving us the confirmation that we ready to go up, right? What is this right here, right? I know it's squanched up, right? But what is this right here, right? What happened right here, right? Looking at that price there. What happened right there? All right, speak to me. Come on. It's squanched up, but look at it now. What happened right there? Yes, breaking market structure. Very good. We had our breaking market structure right there. So right there at that point, right there at that point, that is when the market said, hey, I'm ready to go back up, right? So once you got your confirmation at that point, this is for this time frame, right? You get your confirmation at that point that price is ready to go back up, right? Where does smart money want to buy? Right? Smart money wants to buy below the lows, right? Smart money wants to buy below the lows, right? So if smart money wants to buy below the lows, when you see the breaking market structure, right? What's my favorite signature, right? We got our breaking market structure, right? We push above that high right there, forcing people in the right direction, and then we come back and snatch their wigs, right? What is smart money doing? This is when smart money is buying to get ready to go up, right? Smart money is buying below the lows, right? It get the reversal, show you the breaking market structure is ready to go up, right? It engineer liquidity by forcing people into the market long, right? It neutralizes that liquidity by snatching their wigs, buying below the lows, and then the market takes off, right? Now, Tim, what could have been a clue, right? I'm not a swing trader. I'm not over here buying below these lows, right? I just trade day to day, and I wasn't sure about what price was going to do. We had a large range day that day, and then we had a nothing burger day that day. I'm glad you said that, right? When we have a everything day, right, we anticipate what to happen the next day. We anticipate a nothing day, right? So we got an everything day, we got a nothing day, okay? So now, we have been here Monday, Tuesday, Wednesday, and Thursday, right? So on Monday and Tuesday, we were accumulating. Look, we're just consolidating. On Monday and Tuesday, we're accumulating, right? On Wednesday, that's when we got our everything day, right? We got our everything day, right? We manipulated on Wednesday. And so on this everything day, the next day we say, okay, we probably gonna get a nothing day. We get that nothing day, right? So now, prices, the draw is up there, right? We're anticipating to hit that high. We've been waiting on it, right? We done did the wig snatcher right here, right? And then we got a nothing day, right, on Thursday. A nothing day on Thursday. Right? So since we got a nothing day on Thursday, we just accumulated on Monday and Tuesday, right? Wednesday was the manipulation day. Now we're looking for the expansion. We're looking for the delivery, right? We're looking for the delivery. Why are we looking for the delivery? Because we consolidated, right? We expanded, we reversed, right here, remember that? Reversed, breaking market structure. We reversed, we retraced, right? And now we're looking for the delivery. So on this nothing day, right, that we had a consolidation, expansion, reverse, a retrace, right? And so on this nothing day was the retrace. So what are we missing? The deliver. So how can we anticipate that deliver? Because we consolidated early in the week, we expanded in the middle of the week, we reversed on Thursday, so now Friday we can expect the delivery, right? And can we expect a trending delivery, a rapid delivery? Yes, we can. Why? Because we had a inside nothing day this day, so all we did was just engineer liquidity, took them out, right? Bought below the lows. We bought below the lows here going into the lunchtime on this day there, right? Then the New York afternoon into the Asian, we continue to consolidate. And as soon as New York opened up, just a trend day to the upside, low resistance liquidity run directly to the buy side, right? And that's just that this whole thing we've been doing is just looking at price over the whole week, applying all the different concepts that we can to show you that it's stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. Now, is there anything that we said different about this entire week of price action that we don't say about just the day-to-day price action? Was there anything different? Yes or no?
Nah, ain't no difference because price is fractal.
Price is fractal. You hear me?
Yeah.
Price
That's
is
one
fractal.
thing that's definitely sticking.
Yeah. Price is fractal. Ain't nothing no different. And then you can see, right, everything is time-based. So did you have an opportunity to trade or get good trades every London session? No. This is a London session there. That was nothing. This was a London session here. You probably could have got a little something in there. This was a London session there. Don't look like nothing. This was a London session there. You might have been able to get some, but not too tough. So London meant ugly all week, right? London meant ugly all week, right? But look, in New York been doing the Lord's work. It ain't been the prettiest, right? But look at New York. This one was meh, right? But look at New York, right? Look at New York. Right, the morning, right, afternoon, blah, right, the morning, afternoon, little blah, the lunch went crazy, right, the morning went crazy, the afternoon went crazy, right, New York was doing the Lord's work this week, right, New York was doing the Lord, London had a little something that day, right, I ain't gonna take it from London there, London had a little something that day, right, New York morning was kind of ugly, but it was going down and doing the retracement, right? But it was real ugly, right? New York morning was ugly, but that was the retracement phase. New York afternoon was ugly, right? And then coming over here, New York morning, again, did the Lord's work. So this week here, right? New York, even though it was it was difficult price action in the beginning of the week and on Thursday, right? But New York morning was the time where the majority of the good moves were. And on this day right here, right, even though the price action is bullish, right, this was the best sell side day of this. This went crazy. If you caught this, anything in this right here, this was the best day of the week for trading, intraday trading, and it was to the sell side. This was the best day of the week for buying. You know what I'm saying? It was to the buy side, and it delivered, right? And then it turned around and gave an opportunity to the short side. So Wednesday and Friday gave short opportunities that was beautiful, and Thursday gave a beautiful long opportunity. But the rest of the week, it was hit or miss, right? So 2 really good trading days out of the whole week, right? But Tim, how do you see it in real time? Everything we just talked about tonight. This ain't all the concepts, right? But when you understand, right, the power of 3, the way price is delivered, a verb of the power of 3, accumulation, manipulation, distribution, right? You can engage with the market educatedly. I yield my time. Anybody got any questions for me? Anybody got any questions for me? All right. We're going to call it. We're going to call it. That's it, man. We ain't going to stay around. I ain't going to stay. We done been on here for an hour.
Tim, I do have a question. I do have a question.
Okay. What you
Are
got?
you able to go over what I sent in the question part about the market maker model?
You talking about the one that I had answered?
Yeah, I had like a follow-up question. I sent another picture in there.
Oh, you did? Where was it? Was it in the questions? Where's the freaking in the questions? General questions? Okay.
Yeah, there.
I'm not sure about SMT. I will ask you when we on live, so it's easier. But when I look at the three indices, I think divergence was reason for the many. Let me see here. So this was the picture you originally sent, right?
Yeah, that one's
And
the
then
ES. The one in the middle is
yeah,
the
and I was
NQ.
talking about okay, so at this low here, okay,
Yeah.
so at this low, is this did is this like
Yeah.
this did this low and see I can't see enough of the chart. When is this? Let's go
Okay.
to the charts. When is this? What day and time is it? Like what day and time is that? Day and time frame
So on the hourly,
on the hourly. Okay.
Wednesday at 2 o'clock.
You say Wednesday?
That low. Yeah.
Okay, so Wednesday at 2 o'clock. Wednesday, get on Wednesday, Tim. That's AM. PM. So right around this
Yeah,
time
PM.
here. Yeah, so right around now. Okay. All right. So this is the area we're looking at there. All right. So
This is the YM.
yeah, I know.
Okay.
This is just the chart where I put my divergence on there. Like when I open up the three. This is where I go because I put the YM on the top, the ES in the middle, and the NQ on the bottom. Right. Because ES is the red-headed stepchild in the middle. Right. Okay, so looking at the three stars, we looking right here. This is the spot we looking at, right? So let's squanch it up. Gonna squanch up the chart like this. And all right, so we're looking here. So relatively speaking, at this low right here on the ES, all right, so on this low right here at the ES, we don't have any bullish divergence as far as at the lows. Okay, so what I was talking about was if the ES, like the YM, right? So the YM, this right here would have been at this low here. This is the lowest low that the YM coming below there. Right. So that's the low there. So that same relative low there on the ES. Right. That same relative low there on the ES, which is going to come here. Right. We took that same low out. And then we come to the NQ on that same low. Right. We had been taking that low out. Right. We took that low out there. Right. So at this time, it was divergence here. But when we came back to it there, right, when we came back to it there, relatively speaking, this was the lowest low on the NQ, and that was that low that we had taken out. So it wasn't like any bullish divergence where these two were making lower lows and this one was making a higher low. So we all making the same relative equal lows there. So it wasn't no bullish divergence there. That's what I meant when I was like, I can't see what's going on over there, but if it was SMT, then the SMT divergence could have been, you know what I'm saying, since it took out that low, or it did. I can't remember if it took it. I can't remember exactly what you was asking, if it did or didn't take out the low. Can't remember. But when you're looking at that, you're looking at, okay, is this one making a lower low, that one making a higher low, or that one making a, you know what I'm saying, is all three in sync, right? So all three are in sync at that point right there. So no, there's no SMT divergence there, right? So being that there's no SMT divergence there, let me go back to what your original question was.
It was about the market maker
Yeah.
models.
Yeah, just wondering if the price in the photo, where price is in the photo, I'm thinking that it would be technically still in a market maker sell model until price takes out takes out the breaking market structure line. Oh, you drew a line there till it takes out the breaking market structure line. And put this over there. All right, till it takes out the breaking market structure line. God dog it, Tim. Sorry about that. All right. I say that because although we made a market structure shift higher, that price leg failed to take out the external liquidity. The low is this right, or what would be in market maker by model because price created internal highs market makers. Okay, so all right, talk about that low there, the low that we was looking at. Price came down here, it didn't take that out, and then okay, so now let's go back and look at it there because that's what we was talking about there, and we do have divergence there, right? I was looking further back. I wasn't looking at the right area. So we was talking about this low, right? I was like, did we create a SMT?
Can you put it on the YouTube thingy?
Oh
Not on
man,
it.
my bad. I ain't going back. I ain't going back. I don't care how many fire alarms y'all put in what's the name? Y'all should have came in the Discord and said I can't see the screen. Right? So I was looking at these, like, cause I was looking at when I came in here, I'm looking at this for the divergence, but on the original thing that you sent, this is where we was looking for the SMT divergence there. Okay, so with that in mind, this is the low right here, and if we look here, right, this is the low that you said we failed to take out on the ES. That same relative low here, we didn't take it out on the NQ, but the YM did take it out, right? So there's the SMT right there. That's what I was talking about. If we got SMT divergence, SMT at these lows, right? We're trading below lows, right? Once you trade below lows and then we get an SMT below the lows, this remember when I used to say when you form, like, I prefer to form breakers, but if we get an SMT, then sometime we can trust the mitigation blocks, right? Because we're not taking out the low, but this is the same thing because of SMT, right? So we got the SMT, and so that can be a sign of, okay, we are on the buy side of a buy curve. It can be a part of a larger sell model, but with that SMT divergence right here, right, on a day when you're anticipating price to draw up, right, that bullish divergence can be confirmation that, yeah, price does want to go up. You see what I'm saying? That's what I was talking about there, as far, because you was like, we didn't hit a breaking market. What did you have your breaking market structure at? Okay, here, right there. All right, so pushing up. What time was this? So we go there. We're came down here, came here. So we were pushing right there, right? We was here. This is where we were there, right? And you was looking for price to come up here. So right there at that point there, we got up, and then now you see what we got here now. Now that we got up here, right? Now that we got up here, the NQ, right? The NQ has reached its bullish side draw, right? NQ, what were we saying about NQ? Like, you remember what we was calling NQ last week when I was like, I'm looking for NQ to play what? You remember what I was talking about? Starts with an S.
No.
You don't remember us talking about this? Can you see the screen?
Yeah, Six Sister. I don't know.
Six Sister. You don't remember Six Sister?
No.
Get off my live. Six Sister is when you have okay, look right here. Remember we talked about this is where we wanted the NQ to draw to, right? Why did we want NQ to draw there? Right? Because the ES had made all-time new highs. The Dow had made all-time new highs. And then the ES, right, look right here. Remember those highs right there we talked about on the NQ? Those are those highs. Them same relative highs, right? What happened up here last week? Right? The ES did what?
Divergence?
What did the ES do last week in reference to these highs, these same relative highs? What did ES do?
Random.
What did the Dow do?
It ran it as well.
Okay, so when you have a bullish or bearish bias, right, for your index, you got a bullish or bearish bias, and the other two take out that liquidity, right? You're looking for the third one to play six sister, and six sister means it's lagging behind, right, and taking out that relative area. So now you're looking for the momentum to get to that area to be in the six sister. So the six sisters got that play catch up. You know what I'm saying? Because it's lagging behind. And see, we didn't take that out. So now as price, right, you see it came down, and as the NQ traded up and went into its buy side that we was looking at, right, there's no need for this one to take that out because it already did it. The NQ was just playing six sister. So now as it's pulling back down, right, now you can start anticipating, are we gonna continue to go down and finish a larger market maker sell model, or are we just gonna come down, take liquidity, and go back up? But you want to let price tell you what it want to do, right? You want to let price tell you what it want to do from here, because in this case here, it's just one of them things where this was the index you're looking for to be bullish for the six sister, and this index right here was the one you're looking for to be bearish because it's full throttle in a market maker sell model. And then this one right here is the red-headed stepchild in the middle, because we bullish on the NQ, bearish on the YM, and then see how the ES just kind of hanging in the middle. You see what I'm saying? We got a market maker buy model on the NQ, a market maker in the same relative area, market maker sell model on the YM, when they supposed to be trading together. So you see what it does to the ES?
Yeah, I see it. It's just in the middle, like you said.
Yeah. So it's like, and this right here is one of the reasons why I moved over to the NQ, because I don't know how far back you was going to university for a while, but ever since, like, it might be 2 years now. I know it's at least a year and a half we've been talking about divergence. Y'all remember we've been talking about divert. We've been saying the Dow and the NQ been at odds, and the ES been the red-headed stepchild in the middle. We've been talking about this for at least a year and a half. So that's why I moved away from here and started trading the NQ. Because even if this one and this one is out of sync, this one is moving and this one is moving, right? But this one is just stuck in the middle because the companies that make up this are in both of these. So if you're pulling, if somebody grabs your left arm and pulls it that way, and somebody grabs your right arm and pull it that way, right, you're just going to be stuck right here in the middle. You're not going to go either way. And that's what's happening with this right here, right? The Dow is pulling the stocks down. The NQ are pulling the stocks up. So the ES is just chopping. And that's what makes it a little bit more difficult to, you know what I'm saying, trade the ES. That's why I moved over to the NQ. But you can still see the signatures. You can still see it play out, but you just have to know when to hold them and know when to fold them. Know when to walk away, know when to run, right? Because even if we look here on from this high right here, right? We went there, and then we did not make it there, and to that same relative high, we did not make it there. So now this is bearish divergence. You see what I'm saying? That's bearish divergence, because whenever you get divergence at the highs, that's bearish divergence. Whenever we get divergence at the lows, that's bullish divergence. Right? Bullish divergence. So if you got bearish divergence, and then you're bearish on your index, then that bearish divergence gives you more of even like up here on the YM. Let's look at the YM here, right? So on the YM here, okay, the NQ right here from this high, right? We poked above that high right there. That same relative high right here on the ES, right? Same relative high, right? We didn't get above it right there, right? That same relative high on the YM right around this area here, we didn't get above it, right? So, God doggy Tim. Right? We didn't get above it, right? So what is that right there? That's bearish divergence, right? We didn't get above it. That's bearish divergence, right? So we got bearish divergence on the YM, right? We got bearish divergence. It don't matter which one you got it on, but we got bearish divergence between the three sisters, right? And on the YM, it just happened to be on the YM this time. You got the bearish. It's like the YM is showing weakness, right? The YM is showing weakness. We've come up above, right? We come up above like our high up here, right? And then we come down there, trade below these lows, right? And then we trade back up into the lows, and then we sell off, right? Right after what? When we came here and traded back up, what did we get there, right? This is during the time right there when we got our bearish divergence right here. Then price sold off, giving us a breaking structure, traded back up into the range and sold off. Yep, making its way down, right, to what we didn't hit that low, but making our way down where? Back to the initial consolidation of the market maker model, right? Initial consolidation, accumulation, ugly smart money reversal up there, redistribution, right? Just didn't make it down to the actual sell side, right? But the bearish divergence is just confluence to the fact that, okay, right, we are on the right side of the market maker sell model, because we got divergence at the highs over there, right? And then down here, over there in this area there we was talking about, we got divergence at the lows here, and then the NQ came up and completed the market maker buy model. Make sense?
Yeah, thank you. So I had to look at it not just individually, but like for this case, looking at all of them and kind of seeing the models that they all are in.
You always want to look at all of them, because you always want to look at all of them, and the reason why you want to look at all of them is because one, they should be trading all together, but they haven't been trading all together in like almost 2 years probably. But you want to know when we come to key levels, is there divergence? The divergence just points out there's a crack in correlation. The divergence don't mean you're right. The divergence don't mean, it's showing, okay, there's a crack in correlation. If there's a crack in correlation, right, that's the market tipping its hand. So if you're bullish, right, and you got bullish divergence, then you can be like, oh, I'm probably on the right side because I'm bullish, and we're showing bullish that the market is tipping its hand that over here at this time, they're continuing to sell, but over here they have started buying heavily. They started buying so much that they're showing divergence now, right? They're still selling over here, but they're buying over here. So if I'm bullish and they're showing me they're already buying, I can look for opportunity to participate because we haven't reached my goal, right? And then over here, if we get up here and we get a break in market structure, and you like, okay, this showing me that it might be bearish, and you look and say, okay, we got bearish divergence right there. So I'm probably on the right side, right? And so you look for your opportunity, keep your risk management in place, and then you just let the algorithm play out like it's supposed to play out. But you want to look at all three to get like the overall macro picture, right? You look at the macro picture and look for, that's why knowing all of the concepts help, because when you look at this, you know what I'm saying? Like the first thing I said was if it's divergence down there, then that could have shown you that that was the reversal spot there, even though we didn't break higher there, right? It's just one of the things where you know these things to look at to see if you're right. You know what I'm saying? And then when you say, okay, we are going up, but how far can we go up? And you notice when you wrote out the what's name, we was almost at the top of the move for the ES, right? It right around this time here, right, would have been the same time for the NQ, but the NQ went far higher than the ES did because this was the sixth sister, and this is the index that we're expecting to climb above these highs right there because they already climbed above them highs. So we're expecting this one to climb above those highs, right? And then once this one climb above those highs, then that'll give these that's pulling down an opportunity, right? That's going to get below that low, right? And if that gets below that low and start going back up, right now, what do we have the opportunity to set up, right? Now that we come down here below this low right there, right? We get below that low there, and then we start going back up, right? Just say we come down here and make a low there to get below that low, and then we start moving back up like this right here. Now, if we come here, right? Just say we come here, we don't take that low, right? And then we come here and we don't take that low, right? Now, right? We came down here, right? And we take out this low because that's today's low right there, right? That's today's low, right? We come down here and we take out that low right there. Now, if we don't take out that low, what if we just created there, right? We didn't take out that low. The same relative low that's over here, right, is over there, right? We took it out, right? So now we got bullish divergence, right? And now that could be a sign. If you're bullish, you can say, okay, we got bullish divergence. That could be a sign, maybe. You know what I'm saying? This want to go back to all-time new highs. Maybe this want to go to all-time new high. Maybe that want to go to all-time new highs. But that'll just be like, okay, we get in bullish divergence and we just finished a market maker sell model. So if we come down here and start consolidating and then break up and showing that we're on the right side of a market buy model, and then we get bullish divergence down there, then we can divert our attention on the YM to that high right there. Follow what I'm saying?
Yeah, I am. That makes sense.
All right.
So on the ES, like just specifically on ES, where how it took out the high today, or it got close to it, is that considered a break in market structure, or only if it took out the high? I just want to make sure I have that part right.
You said on the ES. Say that one more time.
So let's see. Yeah, here. So the leg that went up today, that almost reached that high that you have previous, that one.
Mm-hmm.
Is it a break in market structure where it's at now, or only if it took out that high? Because the bottom half of it didn't take out the low.
Yeah.
Okay.
Right there. Right. Yeah. Right here. Right. That's a break in market structure on this time frame right here, because this high came down and took out the lows, right? Okay. And then we traded back above that high right there. Now the thing of it is, like, once we traded above it, we immediately reversed. You see what I'm saying? Mm-hmm. That it's a break in market structure, but we immediately reverse. So when you immediately reverse like that, right? If you reject the high, right, what's your draw? The low that sent you there, right? So we came from here, right? We came from here to there, right? We already hit that low right there. So we rejected this high and we came back down below the low that sent you there. So we came all the way back down to that low. Now that we've hit that low, right? Now this is the time, like I say, you want to see, right? We're down here. We're at a monthly high, right? We're right at a monthly high, right? So this is like a very high time frame anticipatory reactionary point, right? You want to see what price does here, right? Do we continue to dig down and sweep this liquidity before trying to go up, right? Because the Dow, like we said, the Dow is like right there about to finish a market maker sell model, right? And once we finish that market maker sell model, right, do we begin a market maker buy model? So if we come, like, you see what I'm saying, we got that, then are we going to come back to that, right? Coming back to this high. And if we do that, right, the NQ, right, just finished a market maker buy model here, right? And then we, excuse me, right, the NQ just finished a small market maker buy model here, right? But we don't have to go all the way down there, because why? These two already made all-time new highs, and you know what I'm saying, we can be in the middle of a larger market maker buy model. So you don't have to continue to sell off. You see what I'm saying? We can still be playing Six Sister. You see what I'm saying? We can still be playing Six Sister, where we get back on the bullish momentum and then push up so that the NQ can make its all-time new highs, right? When does that happen? Who knows? Does it happen now? Does it happen fourth quarter? Does it happen? We don't know. But this is how you look at all three together to get the narrative. Okay, we're going into the fourth quarter. It's been a good year. Normally on good years, the fourth quarter end good. Normally on election years, the fourth quarter end good, right? We still got the NQ that's playing Six Sister, right? We got the ES hanging around all-time new highs. We got a nice retracement back down into a balanced price range, right? We're trading around all-time new highs. So now looking at the ES, you want to see this act as a balanced price range. We traded below those lows right there. So now you want to see that low remain safe, right? It would be nice if that low remained safe, but you want to see that low remain safe, meaning you don't want no displacement through there. Can it come down and wick below it? Yeah, sure it can. You know what I'm saying? Sure it can, but you want to see it remain untouched, right? And then continue to push to all-time new highs to fit the bullish narrative. But you just watch all three to, like, you know, stay abreast of thing. Have we made all-time new highs in the NQ? No, we haven't, right? Are we moving back into bullish divergence? We don't know yet, but we can be, right? Why? Because we about to complete a market maker sell model, right? And remember, we don't have to take out the liquidity. We just came back to the original consolidation. That can be enough. It's always nice to take the liquidity, because the liquidity is rocket fuel. You know what I'm saying? The liquidity is rocket fuel. But we can look at the fact that with these same relative lows right here, right? Those relative lows that are there on the YM that we traded down below right there. I mean, that we traded to right there like that. These right here are the relative lows. But when we look at the sense of this, like up move and down move, that'll be more in the frame of here. For the ES, that'll be more in the frame of here for the YM. I mean, for the NQ, right? And so we trade here. We've traded down below an original consolidation. Here we've traded down below an original consolidation, right? But we didn't trade down the one on here. So in the sense of they've been so out of sync, that can be all the move that the Dow wants, right? So if we start getting the move back up, and we break back above this high right here, okay, right now we got our bullish momentum again. Let's look at daily charts on all of these here. Right. I know you ain't asked all this, but I'm running my mouth now. Too late.
No, it's good. I need it.
All right, so looking at the daily chart, all right, so looking at our daily chart, you see here, all right, so the ES came back down into that balanced price range there, came down into that imbalance, right? The Dow, right? Like I said, this is the low, right? That I would like to see it sweep under there. I would like to see it take that and go back up, right? And then the NQ, we came down into that balanced price range. So looking on the daily chart, right? If the Dow sweep that low and then go back up, right? What is that going to give us, right? We're taking out this low, but the NQ is going, the ES is going to take a lot more for it to get down there, right? For the NQ, right? It's going to take a lot more for it to get down there. So that right there can be the bullish divergence right there on the daily chart, right? And then we complete this market maker sell model, and it's the daily chart. When we was looking at the 60-minute chart, that's 2 time frames down, and we was looking at these lows here as being the completion of the market maker sell model, right? And then looking at the same area there, it take a lot more to get there, right? And then if we look at this is the lowest low, but just look at the same relative low, right? It's going to take a lot more to get there, right? We got a balanced price range there that we're not trying to get through, right? It's acting as support here, acting as support there, and here we're pushing through it like we want to take that low. You see what I'm saying? So that's why like you can look at it and say, okay, if we get below that, then that can be our divergence, right? Our bullish divergence there that's pointing to maybe the NQ playing Six Sister again and trying to catch up to all-time new highs going into the end of the year, because they already made all-time new highs. Make sense?
Yeah, it does. Thank you. I'm happy. I'm starting to get it because my analysis was correct, but you just added in like the missing pieces. So thank you. That was helpful.
Yeah. And just, like I always say, stacks on stacks. It's like you want to bring, like, you don't want to try to force your will on the market. You want to bring in what the market is showing you, just like how we looked at this week, right? We looked over this week, like it was like I took wins and losses this week. Why? Because it was a difficult week. But when we look at it as a whole, right, we can see that's why I always say go back and look at the charts with everything up with, you know what I'm saying, look at the whole chart, right? To look at the whole chart so you can start to see. And that's why y'all think I keep hammering. I've been hammering home for the last week and a half or so. What's my favorite signature? What's my favorite signature when see? Because that's something that I absolutely love to see the algorithm do, that lets me know, okay, it's go time. I'm about to see a high probability setup soon, right? It may not happen during my trading session, right? And if it doesn't, and that's where the discipline part come in, right? But if we train ourselves on how to see this stuff, when we start to see it unfold in real time, it activates in your mind like, oh, I remember seeing that. And the more you see it, the more you say, oh, I remember that, then you start to trust it. Then you start to, you know what I'm saying? Then you start to trust it, and then you don't feel bad like, okay, I got caught up in some manipulation. You know what I'm saying? Get them next time, Tiger. You understand what I'm saying? So I'm glad you're starting to see it. I'm glad it's starting to make sense. Shout out Kashaya for the aha moment. I guess my question should be, is it always the ES that's impacted when there's divergence? Both of them be impacted when it's divergence, but when all of them get impacted by divergence, but when the Dow and the NQ are going in separate directions, it causes a lot of chop inside the ES, because the big companies here and the big companies there are the same big companies here. So for example, like here, just say this right here is Google. Google is going down right here, right? Google is going down here, but over here, let's like just say right here, Google going up, then it went down, then it went up, right? But over here, Google was just going straight down, right? So, but Google is in here also. So what is Google gonna do? You see what I'm saying? What is Google supposed to do, right? It's like, so when these are at odds, these are daily candles. So, you know what I'm saying? It ain't making a whole lot of sense. But if we go back to like 60-minute candles, right? We go back to 60-minute candles and do it like this right here. Now, right? Do it like this here. So now, like, just look at this little piece right here, right? So if we get our crosshairs and hold our crosshairs right there, right? So right here at this point there, we can even see it there, right? At this candle right here, right? This is the highest candle on all three, right? Right there, this 9 a.m., this 10 a.m. candle, right? This is the highest candle on all three. Okay, and then the Dow bleeds off, right, and drops down up under these lows right here, right? So it's just selling off, selling off, selling off, right? But over here, right, we drop down, but we're not selling off as much, and we're not going below the lows. So we're doing more, we're selling more in Google here than we're selling over here, right? So this is trying to drop just as fast as this, but it can't drop just as fast as this because we're not selling Google as much as we're selling it there. So it's kind of torn in between. You see what I'm saying? It's kind of torn in between. There's a lot less selling Google here than it is up there. So it's like affecting this, right? But sometimes the ES will lead. Sometimes the ES will be making higher highs and the other ones won't, because there's a lot more companies in the ES than it's only 30 in the Dow, and it's only like 100 or so in the NQ, but it's like over 500 in the ES. You see what I'm saying? So it's like sometimes that'll lead, but for the most part, the Dow or the NQ going to be pushing against each other and stretching the ES in opposite directions. Yes, it's always gonna be the one that give you, I ain't gonna say always, but it's gonna be 98% of the time. This is where the most chop gonna be, when this is down and this is up, or when this is up and this is down, right? 90% of the time, that's where the chop gonna be. Cause like I say, it can be times when they're not just pumping money in the market movers and they're putting money in like the non-market movers, and then that'll make the ES kind of lead relative either strength or weakness, because they're moving the money in the non-market movers, and it's only 30 stocks here, 100 or so stocks there, and over 500 here. So if they're not pumping money into Google, Apple, Microsoft, Tesla, all the big ones, you know what I'm saying, all the big ones that's in between all three, then, you know, that's what it is. Okay. 50 minutes later, y'all thank Kashaya for that. 50 minutes later.
Thank you, Kashai. We appreciate them extra 50.
Hey, man. I think that's it. Anybody got anything else? That's gonna be it, I guess. I appreciate y'all for hanging out with me. I know True Blue Gang. Hey, 80 up in here. What's up, 80? Somebody named TK was in here. TK, I do not trade with Fast Track Trading no more. I had one account with them. I accidentally blew it. I talked about that already on the page. I accidentally blew the account because I had to trade two separate platforms. Forgot I had the trade open, and I blew it. And then when I was considering going back with them, their CEO was saying some very racist, not nice stuff about somebody. And then he got on Al Gore's internet and shared a video trying to justify why he said what he said, and talk about it had nothing to do with race, even though he was using racist terms toward that person. And I said, you know what? I don't rock with that, so I can't support your company. All right, so it is what it is. That's why you don't see any affiliate links for me for Fast Track Trading in my videos no more. If you look at my description, it don't say nothing about join Fast Track there on my videos. I didn't go like way back and try to remove it, but I just stopped talking about them. Stop. I ain't got nothing to do with that. If I don't rock with you, I don't rock with you. You feel me? I hope your Popeyes has not arrived yet, because it's, oh yeah, it's cold. I got to put that in the air fryer. That's going in the air fryer. E-Rock, what it is? It's Friday. We got, me and Timothy got some stuff we gotta do tomorrow. Chris got some stuff he gotta do tomorrow. Calandra got some stuff she gotta do tomorrow. This is the last Sunday of the month, so we ain't got no Q&As. I'm relaxing. I ain't gonna do no pop-up. I ain't gonna do no nothing. I'm relaxing the whole weekend. Y'all take some time off. Y'all chill, relax, enjoy yourself. Mentees, we gonna do tape reading with Timmy Monday morning at 9 o'clock. I hope everybody that tapped into the tape reading that we did. When did we do that tape reading? I just did that again. How did I do that? I just did that again. How did I do that? That little X thing. Yeah, I don't know how. I be hitting something that make this blue X pop up. Cross lines. What are cross lines? I gotta figure out how I'm doing it. Cross. Alt C. That's what I did. Okay, when I had an Alt down. Oh, cause Alt C is for camera. No, it's Windows C. No, it's Alt C. Alt C is for camera. Yeah. So Alt C is for camera, but Alt C is for crosshairs. Okay. That's why, cause I'm like, how do I keep doing that? Okay. All right. Let me get rid of these. Okay, man, that's it, man. I appreciate y'all for tapping in. Mentees, Monday morning. Like I say, everybody else who got an opportunity to hang out with us whenever we did it, I can't remember when we did the tape reading. Was it Monday? Hopefully y'all got something out of it. It ain't a pitch for y'all to join the mentorship, but that's just what we do. I'll see y'all Monday, mentees. Everybody else, I'll see you Monday evening for the price action recap. Tell a friend to tell a friend to tell a friend to come tap in. Hey, do me a favor. Go in the next room right now. Hug your spouse. Tell them you love them. Hug your kids. Tell them you love them. Hug your dog. If he or she's scrubbing around on the ground, scratching on his back, go over there and rub his belly. Give him some scratches. And then I'll see y'all in the next one, man. Y'all be safe out here in these trade streets. We're gone.